Welcome back. We have breaking economic news. The U.S. non-farm payrolls number has come in much higher than expected. The number is 339,000 jobs added to the U.S. economy during the month of May. That is well in excess of the 195,000. That was the consensus call from economists polled by Bloomberg News. So the big question is, will this change the landscape for the U.S. Fed enough that it perhaps raises rates again in June, on June the 14th, when it's due to make a policy announcement? The thinking of many economists. Our featured guest of the morning this morning, Bill Harris, and the debt markets as well, is that the Fed was lining up to not raise rates on June the 14th, to pause, perhaps on its way to an increase in July. This may change things. The U.S. labor market, once again, much hotter than economists had forecast. 339,000 jobs added to the U.S. economy during the month of May, more than the 195,000 that was expected. The unemployment rate, perhaps counterintuitively, is higher than forecast. It comes in at 3.7%. This is likely a participation issue. And where is the wage growth? Average hourly earnings on an annualized basis come in a little bit lower than expected. 4.3% is that number. 4.4% was the expectation. So again, to sum it up before we go to an expert for commentary, the change in non-farm payrolls, 339,000 jobs added to the U.S. economy during the month of May. 195,000 were expected. The unemployment rate is 20 basis points higher than expected at 3.7%. And average hourly earnings on a year-over-year basis come in at a growth of 4.3%. 4.4% was expected. As I was reading those numbers, revised numbers for the month of April hit the screen, and they also, at least on the non-farm payrolls line, are stronger than expected. 294,000 jobs, the Labor Bureau now says, were added to the U.S. economy in April. That's stronger than the 253,000 originally reported. Well, let's digest these numbers now with Claudia Sahm. Claudia Sahm is a former U.S. Federal Reserve economist and founder of Sahm Consulting. Claudia, thanks a lot for joining us. What's your take on these numbers?
It's good. I mean, a good jobs day, big increases in payrolls. These are, and the wages are still above pre-recession levels. I mean, these are people getting jobs. And honestly, I know there's going to be a lot of commentary about, is this harder for the Fed? What does the Fed do? The Fed, another quarter basis points doesn't mean that much. But what we're seeing in the jobs, this means a lot to people.
That's my next question. You've already gotten part way into. Let's finish the conversation. Does this change the calculus for the Fed? Does this push the Fed to a rate increase on June the 14th?
I think yes is probably the answer to that. The pause was much clearer up until today's jobs day. And so that put some pressure on them. Now, I will say, if they would think about the lags and how things go through the economy, they should pause and let things work themselves out. And frankly, what we have learned, the Fed is not in control of this labor market. And that's good, but they are going to be surprised. Why won't these numbers slow up? And I think this is a great way to solve a labor shortage. Bring in more labor.
How do you do that? Some of your peers in the economics community, these are a trio of Bloomberg economists, say that unemployed workers are absorbed quickly into this U.S. labor market, while the flow of newcomers to the labor force is a trickle. How do policymakers increase the flow of newcomers to the U.S. labor market?
Well, honestly, that's a place where they probably want it to kind of moderate some, because and it is absolutely true what you said about the researchers, that it's a little counterintuitive, but when we get these payrolls, quite a bit of that is people coming from unemployment straight in to employment. And that says a lot about how much better the jobs have gotten in a short period of time. To ask the Fed question a different way, do these numbers contribute to elevated inflation in the U.S.? Do they make it more difficult for the Fed to reduce inflation? It depends which model you use. And it was definitely the case at the last press conference. Fed Chair Jay Powell was very clear that he does not, and this projects to the FOMC, that they're they don't have this one-to-one. Wages go down and then inflation goes down. Like, these are related, and it is, I mean, it's frustrating. They do need things to cool off, but the labor market is not cooling off, at least not as much as the Fed would say they want.
And we can tell viewers that rates in the U.S. Fixed income markets are reacting, perhaps as we would expect, to these numbers. The two-year yield is jumping above 4.4%. In reaction to this move. Again, the numbers are as follows. 339,000 jobs added to the U.S. economy during the month of May. That's many more than the 195,000 that were expected. Wage growth comes in at 4.3%. Versus the expectation of 4.4%. And the April number on job creation has been revised upward. Initially, the Labor Bureau said that 253,000 jobs were added in April. That now stands at nearly 300,000 jobs added in April. What about the wage growth number, 4.3%? Is there a glimmer of good news there from an inflation containment point of view, that wage growth comes in a touch lower than expected?
I think what we saw on the wage side was pretty confirming a lot of what the Fed was saying. It was on the payroll side that everybody got it wrong, or most everybody got it wrong. So I think, and the other thing I would say is the Fed doesn't react to every data point, right? Like, there is an understanding that 1 month, 2 months, it can be high. Now, they've had several months of job gains that just are kind of surprising how much they've held up. I don't see that turning any soon, right? I do think it'll moderate with the wage growth, but he made clear that that is not what he is blaming for the higher inflation.
Okay, let's finish with what you expect the Fed to do on June the 14th, and what do you expect the Fed to do at its July announcement?
So it's entirely possible that we get a quarter point 25 basis point move. That's absolutely in the cards. I think by the time we get to the next,
correct? In June.
In June,
right.
Yes, in June, I expect 25, a quarter point up. For the later meetings, I think we're going to see a series of pauses, and yet it's going to determine by the data, particularly the inflation data.